Bleeding Edge subscribers, hopefully you guys are doing well. Now look, 3 months are in the books and we're now actually a quarter of the way through 2024. It really seems like right now, everything in these markets is up. The S&P 500 is up like 10%. The NASDAQ is up about 9%. Bitcoin is up an astonishing 57%. This is just from the beginning of the year. Gold is up about 8%. You even have sectors that have kind of lagged behind a little bit, like healthcare and financials. They're also making 52-week highs. Many of you watching or reading this likely fall into one or two categories. You either were maybe a little too conservative and have been sitting on a pile of cash earning a couple of percentage of points of interest, or you made some of the right moves getting back into this market. But in hindsight, you actually could have been maybe a little bit more aggressive when prices of all these stocks were a little bit lower. The first thing to realize is no matter which camp that you sit in, you made the right decision. Sitting on cash and earning some interest for the first time in what's it been, like 15 years, that's not a mistake, okay? And being disciplined and getting back into the markets after the nasty fall many stocks took in 2022 was also the right move. The truth is, no matter which route that you took, you're in the perfect position to capitalize on what's going to happen next. The honest truth is, nobody wants to say this, but nobody knows for certain what will happen next. I listen to folks that have been calling for a recession now for several years in a row. And even the hold and hope crowd, they've been wrong too, as stocks like PayPal, Match Group, and even the biotech sector, many of these stocks simply have little chance to reach the pandemic levels really anytime soon. But here's what we do know. Next week, we'll begin a new cycle of company earnings reports. Every major company, from Microsoft to Apple, will give us a progress report for the first 3 months of 2024. And more importantly, most will give us financial outlook for the next quarter and beyond. Later this week, I'll be giving you a preview of the financial sector or the major banks and what to look for when they report their earnings next week. The truth is, this is really important. The truth is, the next 4 weeks will be the most important month of 2024 in terms of investing. With seemingly every market pushing higher and higher, this round of corporate earnings will decide if that can continue or if markets will ultimately begin to fall. The most important thing you can do right now is develop a game plan. The reason we need a game plan is buying into this market could become very, very difficult. That's because our natural instinct is when stocks have rallied as much as they have over the past 3 months, we feel like they must be ready to crash or fall. And that's why the next 4 weeks are so important. With a solid round of corporate earnings and guidance, that could easily send markets even higher. Just look at stocks like Nvidia and Microsoft over the past year. You could have bought them after the initial hype of artificial intelligence really took off and still be sitting on huge, sometimes life-changing gains. I hear it all the time from investors. Sometimes we recommend a stock that has already rallied and many feel that it's too late to get in or we're late to the party. The truth is, it might actually be harder to buy a stock that has gone up 50% in a short period of time than to buy one that has fallen 50%. But in reality, financial performance and potential really can drive stocks higher and higher for a really long period of time. Now, speaking of stocks that are falling, the next 4 weeks could usher in a round of profit taking and selling in Wall Street. If and when this materializes, the macro pundits that have been calling for a recession for several years now, they'll get louder and louder as they feel like their chance to be right has finally come. Words like market crashing, bubbles popping, and defensive strategies, all of that will gain traction. And all of it will be a distraction. That's because the markets will be falling for really one of two reasons. First, the market has gotten ahead of itself and priced in revenue and profits that simply won't show up until maybe a later date. I often refer to this as kind of a re-rating of stocks or a resetting of expectations. Under this scenario, We will be, and we are active buyers of stocks that are falling. When you have a resetting of expectations and a re-rating of stocks, as long as the profit potential and revenue potential in the future is still there, we are a buyer in that scenario. The second scenario is a little bit worse. That's one where things have materially changed and revenue and profits just simply aren't going to be there. You can look at sectors like the electric vehicle and solar stocks. They've experienced this over the past 12 months. Just looking at the financials of stocks like Rivian, Lucid, and even Tesla reveal what happens when demand actually dries up. The next 4 weeks will decide which direction we go. Now, I know you don't subscribe to this newsletter or watch the videos to have me tell you stocks are either going to go up or they're going to go down over the next 4 weeks. The truth is, anyone can tell you that. So here's what I think is going to happen. Expectations are simply too high, nearly across the board. As excited as I am about artificial intelligence, it's still very, very early. Companies like Microsoft are rumored to be spending over $100 billion on a single data center. Just one data center, $100 billion. Now, to give you some context, Microsoft today spends $50 billion annually across all of its data centers, all of its property, plant, and equipment. And the real reality is this investment cycle, where we're talking about tens of billions of dollars, $100 billion, this investment cycle is not going to be offset by revenue immediately. That means these companies are going to take a hit on the profits. And that's going to be Google, Apple, Amazon, many other technology companies are in the same boat. Semiconductor stocks have rightly priced in a lot of this growth, but there's only so many chips that can be ordered and delivered in a single year. This round of earnings over the next 4 weeks is likely to have stocks fall from the highs, giving us excellent, excellent buying opportunities of high quality stocks at lower prices. And again, later this week, I'll return to give you specific financial metrics to look at so you're prepared for this very, very important 4 week period of time when we hear from nearly every major company in the stock market. That was the Bleeding Edge for today. I'll be back again later this week. Good luck with your investments.